Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's video, we are going to discuss another turnaround company. And this company is a company that is currently sitting at a market cap range of 12 to 15,000 crores, which is very small, but it is also a household name that many of you guys already know about. Now, before we get into the video, let me quickly tell you that I am a SEBI registered research analyst, and this is by no means a buy or sell recommendation. We are only going to look at it purely from a fundamental standpoint and understand what actually changed in this company. Also, just before we begin, I just want to update all the people who are a part of the YouTube community that now we have started migrating our YouTube community to Telegram. And you can see here that on Telegram, we basically post 2 to 3 times more content than what we used to post on the YouTube community. And this is going to be at 40% lower than what you were paying in the YouTube community. This is going to be at 149 rupees a month instead of 199. So if you are interested and you're already a part of YouTube, you can stop it and quickly migrate to the Telegram because it's easier for me to give you more and more updates. I'm going to put the link of that in the description below. Awesome. So today's company that we are looking at is called Eureka Forbes. Now, I know most of you guys have heard of Eureka Forbes. And when you think about Eureka Forbes, you're like, Shashank, yes, it is that water purifier company that we have. What is so great about this company? What is happening with this company? Some of you guys would not even know that it would be a listed company. So today we are going to understand what is this turnaround that is happening? Why is this company at such low market cap? And what is the future of this company? So that is something we're going to look at from a fundamental standpoint, right? Now, first things first, this company is definitely a market leader, right? They had a huge period of stagnation, and in the past, they had multiple different structuring issues. For example, this was a company that was a joint venture between the Tata Group and Electrolux. After that, Sharpoji Polanji bought this group and made it into a subsidiary. After that, they sold this company to a company called Advent International, and Advent International took this company and relisted this company back in 2022. So as you can see, from 2022, this company has been listed again, and right now it has gone up to around 640. It was relisted at something around 320 rupees or something like that, right? So this company has been relisted, 391 it was listed, now it is sitting at 640. But what is going on with this company is what we will look at. This company is a 12,490 crore market cap, which is approximately in today's USD INR a 1.1 billion company. P ratio 67 and industry P is 61, debt free company. And we will go deeper into the revenue, profit and loss statement, but you can see what I'm talking about with respect to turnaround. So in 2022, they got bought over by the Advent Group. And then you can see in 2023, the turnaround has begun. The revenue has been growing up. The profit has been exploding, right? And the net worth is also quite aggressively good, right? And if you look at this from a yearly standpoint, you will see it beautiful over here, right? And even the cash flow is looking good at this point right now. So that's what I'm saying. So this company has started doing a turnaround, but we'll understand what is going on with this story and what is happening with this company, right? Now, first things first, India from a consumption standpoint with respect to aspirational consumption has started growing aggressively. Now, a lot of people have started buying stuff, right? We have definitely bought water purifiers at our home. Sometimes we buy Aquaguard, Eureka Forbes. So many different companies are there. Havels, we buy all of these things, right? But water purifier market share in India is basically at a decline. And this was the problem. So they had a decade of stagnation caused the Pioneer to lose its edge. They were actually at number one position. The revenue peaked at 3,000 crores pre-COVID, and they had not recovered from that till date. Right, the parent group had a lot of debt issues and they had to sell a lot of assets from Eureka Forbes. And in fact, even today, Sharpoji Polanji has a lot of debt on their bank account. Then what happened? A top tier PE firm called Advent came in and they took ownership here. So in 2021, they basically acquired this company for a value of 4,400 crores. Today, it is sitting at 12,000 crores. Demerged and listed the entity. Advent's current stake is 62.5% in the business. And the main key thing over here is the person who came to lead this company is a person called Pratik Pota. Now, Pratik Pota, who joined in 2022, is known to be a turnaround expert, and he was instrumental in making Domino's Pizza do really well in India. So he is ex-Domino's, which is Jubilant FoodWorks. So he knows how to change the structure of a company. He knows how to run a listed company, and he knows how to do a turnaround. And he brought in a completely new team to run the FMCG business in this as well. So as you can see, Pratik Pota, because it's very important for me also to understand from an analyst standpoint, who is this person who's coming and leading the charge? So as you know, he was a CEO of Jubilant Foodworks. Before that, he was COO of Pepsi. Before that, he was VP Marketing Bharti Airtel. Before that, he was in HUL. So he is basically an all-rounder when it comes to growing the business. And they started a new strategy. Okay, the new strategy was called Project Udaan, and we will go deeper into this in their investor presentation also. So what they said is they want to start launching more products at a lower price point. Usually what happens, while water purifiers today are quite expensive. So they wanted to start at 5,000, 6,000 range as opposed to today's range of 11,000, 12,000. They wanted to also expand their portfolio and not just stay here. And I'll show you what they've expanded into. They have started getting into air purifier market, robot vacuum cleaner market. So they have started getting into all of that. The biggest problem in India with water purifier was the servicing. So they said we will fix the servicing issue, reduce our AMC charges. And this is like, by the way, an annuity business for the water purifier businesses, right? They know that by law, not by law, they know that every time someone buys my air purifier, there's a very high chance that they will keep renewing from me and they will keep changing the water filter from me, right? Every 1 year, every 2 years, every 3 years. For them, it's like an annuity business. So that is where they make a lot of revenue. And then they said, we want to start building a D2C platform. Now, this obviously seems like slightly away from what they are actually building, but they want to build an e-commerce platform for all digital products. Now, early results include a 36% headcount reduction and with savings reinvested into R&D. So this is the beauty and the smart part. They took all the revenues that they saved from firing people and put it into R&D marketing so that they can get more sales at the top line. Now, see how the difference comes when it comes to a turnaround. Earlier, they had a negative volume growth. In 2024, they started with double-digit volume growth. Their EBITDA margin before was loss-making. Today, it is 10% and it is growing towards 12 to 15%, right? The balance sheet earlier was a net debt company. Today, they're 100 crore net surplus company, right? Market share earlier was declining. Now they have started increasing their market share back to what it was before. You can see the revenue growth, how it is growing. And even in their quarterly results, the revenue growth has been quite good. Their margin, as I told you, is constantly going up. So their adjusted margin this quarter was 13%. So this is expected to go up to 14 to 15%, showing that operating leverage has kicked in. Now, what are they doing? Why have they focused on this cash generating business model? Again, don't forget, this is a very small company. It is at 12,000 crore market cap, a household name, right? They basically said, first, we will sell the product. We all know this. They sell the product. Then they get into the service contract, which is AMC. This is what I told you, that it is a recurring business for these people, right? So they can actually reduce the product sale, but they will get a lot of money from AMC. It's like buying a car, but you keep doing the servicing all your life. So recurring service revenue today gives 36% of the revenue, right? 36% of their entire total revenue is just the AMC business. And this is a predictable, profitable, income that keeps coming and is very stable also. Then this leads to negative working capital because they keep getting revenue, so they know where to put this money properly into it. And then they make a lot of cash, and they have a database of more than 14 million customers. That is one of their unique stuff. And this is not just this company, a lot of companies are doing this. Now, look at the core categories they are currently into. This is what I'm saying. They have gone beyond water purifier. Number one, they have the water purifier in the product market. The estimated market size is going to grow to 10,000 crores and it's growing by 13% CAGR. They have around 6 to 7% penetration. The water purifier service market will become a 9,000 crore market, 14% CAGR, and they have around, the penetration is less than 25%. Coming to water softeners, 3,000 crore market growing at 17%. Vacuum cleaners growing very fast at 29%. And air purifiers, as we all know, in Delhi and many places, including Bombay, I think has reached 150, 160. This is also growing a lot. And even I've been researching a lot about these products, right? So you can see that the entire industry is going to grow by around 15%. And here they are now getting into everything. When you talk about water purifiers, they have realized that to make a good money into this and to make recurring income, they have to sell more product. And in the market, many people sell mid-range to premium. Now they have got into economy water purifiers, they have mid-range water purifiers, and they have premium range water purifiers as well. The main goal is to get 70% of new users should come in this category, and they want to reduce the total cost of ownership, known as TCO. As I told you, the average range is 11 to 15,000. The premium range, with those weird RO and VRO and all of that goes to 20-25K with lights and all of that, right? Water softeners, I don't know what water softeners is as of today. I have not used it, but this is used in many places. 90% of India has a hard water problem, and this is a big problem. I think in Bangalore also some water is hard. Air purifier is a growing business that is growing extremely well. Now, coming to this business, now this is growing very fast for this company. As you can see, the growth multiple they have said is 25x, but I won't take 25x. We are conservative people. We will take a smaller conservative multiple, but this is growing a lot because more flats are being built, more nuclearization is happening. So if the real estate boom happens and one place has, let's say, 100 flats, that 100 flats will need 100 water purifiers, will need 100 ACs. And a lot of people are now getting into vacuum cleaners. They're getting into robotic vacuum cleaners. The new age IT guys are getting into this as well. And that is what the game is here with this company. They have actually diversified away from water purifiers and have got into multiple different products. Now, all these products will require service. So everything ties back into a cash flow generating business, which is the service, which many of us ignore. When we think of Eureka Forbes, we always think about water purifier. But it is not just water purifier. That is just one part. The remaining part is a service that becomes a recurring revenue, like a SaaS business. Now, coming to their revenue has grown from 2080 to 2436, and their revenue ambition over the next 5 years CAGR is to grow it at a massive rate, right? Right now, they're making around, in 2023, they had 2080 crores. 2025 projection is 2436, right? And if I just check the actual number, that is not the prediction, it is actually the number 2436, and they have grown almost 20% over the last 2 years, which is very good. And their PAT has also gone up quite aggressively. Let me just check the PAT. Yeah, PAT has gone from 17 crores to 163 crores. The EPS has gone from 0.88 to 8.44, and their EBITDA has gone from 132 to 285. So as you can see, clearly this is the way a turnaround happens, where 2x revenue and 3x EBITDA they're planning in the next 5 years. This is their ambition to reach a 5,400 crore top line, 800 crore EBITDA, which is, again, if they do it, it'll be very, 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 very interesting, right? Now, if I go to their investor presentation also and just quickly show you some of their existing stuff, right? We covered most of it, but let me just show you some other interesting stuff as well, right? This is, as you see what we have done. AMC penetration is less than 25. This is what they want to unlock. They want to get into this. So product purchase, installation, warranty lifecycle, AMC lifecycle, service request. This is where they want to play. And this is so beautiful because this is exactly what they're doing from a turnaround standpoint, right? And that Pratik Poddar knows this extremely well. And that is basically what they are currently playing. The revenue is growing, the bottom line is growing, and this is what I said. They're in across different categories, low economy, medium, and upper category as well. And it looks very beautiful, right? It looks very beautiful. So this is the new range of products, which is the vacuum cleaner. They have the full station auto bin home mapping and convenient cleaning. So normal vacuum cleaners, cordless. And you would have seen a lot of ads with Dixon and all, but this is basically what is coming from their standpoint, the cordless ease and all of that. And these are very high margin products that are coming up right now. And you can see that with the EBITDA margin. EBITDA margin is also growing very well. And that is also doing really well. And they have an app and all of that to check everything. So this is, again, a very, very, very interesting company. Now, is this space crowded? Answer is yes. It is definitely crowded. Is there scope for this business to grow? Answer is yes. There is a lot of scope for this business to grow. As I said, it is a 12,000 crore company, and we should ideally look at from a longer standpoint, right? If I look at it 4 to 5 years down the line, then I say, okay, yes, 4 to 5 years down the line, with the cash flow becoming positive, surplus even, net debt is no longer there. They're actually cash surplus. Now they have started reinventing themselves and they're going across different products. Usually everyone sticks with one product. This company has now expanded into other products, which becomes a huge advantage from a turnaround standpoint. Yes, the P ratio, is it ideal right now? Answer is no, because it is slightly sitting at a higher P ratio. But I think the market is giving it some premium only because it is growing at a slightly faster pace. It is currently sitting at 4.75 market cap to sales. And for a consumer business, 66 P is definitely on the higher side. But what we are looking at from levers or triggers, because it's a 12,000 crore market cap company, there is definitely EBITDA expansion happening. Operating leverage is increasing. Revenues will also grow at a steady pace of even, let's say, 15%. The PAT is definitely growing. And Pratik Pota is a very strong management who's also proving a point. And it is a PE-run business. And the main advantage of PE-run businesses, they come in at a point and they want to make this business a 10x opportunity and then sell it off to somebody else in the future. That is how they basically think about the game. And that is exactly what is happening here. They have just come in 2 years ago. They've already turned this around into a three-bagger for themselves. And I think there is still a long runway to go. Is the P ratio ideal or is the current multiple ideal? Answer is no. Has it factored in at least 6 to 8 months of growth in it? Answer is yes. But it is definitely a turnaround candidate that should be in your watch list. Maybe 3-4 years down the line, if somebody watches this video today, can come and update on what the market cap of this company is. But again, this is the idea. And I'll keep sharing more interesting stuff about this company. If you want a quick infographic, which I made on notebook, see this looks very nice. You will see the previous decline and the catalyst, period of stagnation, new catalyst, new owner, project Udaan comes into the picture, product portfolio changes, immediate effect coming in revenue, immediate effect coming in EBITDA, and it looks very beautiful from that standpoint, right? So the whole idea is to learn, understand, and make sense of some nonsense as well, right? So I hope you guys enjoyed this episode. And again, for all the people who are watching this, we have migrated to Telegram. I'm putting the link below as well, so you can join it. And I will give you a lot of updates on Telegram as well. Okay, it's not stock recommendations, it's fundamental analysis over there. And you can join that as well at 149 rupees a month. This is me, Shashank Udupa, signing off. Take care. See you guys. Bye bye.